Okay, let's look at a couple of other synergies now related to the BTX, along with a few other ocean-based tools. I'm going to leave us on the very same market, and this time I'm switching where I'm also showing the component 4 line in addition to this triple STX and the regular ocean moving average on the screen. Note that the locations that we had examined on the prior chart via the BTX1 line and BTX2 line studies are marked here as well. And now notice how the component 4 line, whose math is radically different from that of the BTXs, confirms and enhances almost every one of the locations discussed a moment ago. That is, for instance, here is a conjunction taking place by the component 4 line, another conjunction taking place right here, which was identified by the BTX1 line and BTX2 line, another conjunction here, also identified by behavior of the BTX1 line and BTX2 line. We have a final thrust where we were looking at that divergence situation in the moving average crossovers. What we have here is a convergence and conjunction. This time we're trapped by the resistance of the overhead centerline moving average from the component 4 line, and note the divergence taking place here as well from the component 4 line. And of course that information is true in other locations as well. Here we've gotten to the first hook down in the BTX1 line. We're overbought by virtue of the component 4 line. We're in a pinching situation here, and then ultimately, as we discussed a moment ago, when the moving averages were violated in the opposite direction, basically at that point and very near the location where we got the exchange of dominance, notice that the component 4 line at that point cut sharply from above to below both the medium speed and the slow speed, and then ultimately below the 0 line as the market started to bleed off. I also want you to note the locations on the bar chart where I've placed these red question marks. Here, 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 and this question mark D shown in yellow. These would each have been very nice trade setup locations for short trades. But other than the triple STX penetrations that we discussed at the beginning of this introduction, we really don't have any pinpoint accurate means of taking those particular individual trades. I wonder if any of the other ocean-based tools that we've explored might provide some clues for us. Well, let's go back and visit our NMC study, which is specifically designed to offer highly accurate trade setups. Okay, here's the same chart of the Euro-Dollar weekly, now shown with the NMC and NMS studies added in the bottom two subgraphs. Note first the incredibly accurate NMC zero hit buy setups throughout 2007 and into mid-2008. This location here, another one here, at this point, and the orange dot is telling us that's a zero hit. Here, here, here. And these conform to all the patterns and setups that we'd previously discussed in our short segment pertaining to the NMC and NMC2 studies. Each and every one of these NMC setups and entries were available to us, and in each instance the risk required to enter the trade was limited to the range of a single bar. However, the reason we came here to this chart was to address the question marks from the prior screen, if you'll remember. Note the down arrows that I've shown on the chart here in yellow, here and here, here, and then with this daily right here. We can now see that each of those locations, that is right here, and our entry will basically put us in as the move started back down, right here. By the way, this was a cross-kiss zero hit, as was this as well. And if you'll remember, when we were talking about the NMCs, the cross kisses, like at a point like this, as well as this one here, and we call it the cross kiss because NMC has been above zero for an extended period of time, then cuts below zero and makes its first return to the zero line from above, creating the sell setup. This is one of our most powerful and reliable NMC setups and should almost always lead to a large and durable move. Now also, remember the question mark D location on the prior chart. Here it's marked as daily, or DLY. It wasn't a zero hit here on the weekly chart, as you can see, But if you'll grant me just a little bit of trust, I promise you that it was an MC sell setup zero hit on the daily time frame, and the exchange of dominance coming from the BTX2 line, shown right here, ensured that the trend had clearly reversed to the downside at that point. In fact, what this exchange of dominance is doing, just as important as the zero hits that do confirm by virtue of bouncing off the zero line, there are also locations where the NMC simply cuts through the zero line. We get the setup, and at that point that's all we know, for instance here and here, but the market then just simply continues to collapse, never giving us an entry signal, and these are crossovers indicative of a new trend. What we see here by virtue of the BTX2 line, and in fact the information is equally valid from the BTX1 line being below its standard deviation band, you get that exchange of dominance, and what that proves to be is a crossover creating a new trend in the opposite direction. It was true in that location. Here we had the BTX1 line come down to the trend threshold at 35 and its lower standard deviation. We had the exchange of dominance here by the BTX2 line, and basically that was a location where the NMC simply sliced below zero. By the way, I've added the NMS here to show you things like we had mentioned the three different moving averages. That is the fast ocean moving average in red, the regular ocean moving average in green, and the center line moving average bisecting the standard deviations as a white dash line. Notice that as we were forming this top up here in price, the NMS had given us the warning, and it was true to some degree from the NMC, but because the NMS is a little bit smoother, to me it's simpler to understand. We were already in a bearish configuration here with a lot of overhead resistance being applied by the conjunction in effect of three moving averages at that point, all overhead giving us resistance. Here was an opposite scenario as we were forming the bottom. The NMS had cut back above its moving averages, now providing support, and we get the crossover of NMS back above its zero line. Here's a location where there's severe pinching taking place from the NMS, indicative of the way a market move ends oftentimes, and we get into that bearish configuration relative to the moving averages once again. And again, all of this information here was present by the component 4 line, substantiating what we had already seen from the BTX1 line and 2 line. All right, I hope this exploration of the BTX tools and the inclusion of a few additional Ocean Pro tools has been informative and helpful. By the way, as I'm wrapping up here, I wanted to go back to the Genesis platform because we want to give each platform its due and take a look at how the BTX looked on that crude oil chart that we had originally used earlier to demonstrate the triple STX and the component 4 line. It's a different market, but the very same tried and true patterns that we just discussed are operative here as well. You can peruse this chart on your own. I think you have to agree this is some powerful stuff coming from these BTX studies. By the time we're done with the entire video series, each one of you should be able to identify the very same trade locations that I've marked here on this chart, and for all the right reasons. Okay, now that we've taken a brief look at the individual tools, let's recap where we've been throughout this introduction. I hope to demonstrate how essential each of these new indicators are to an accurate appraisal of market conditions, as well as to demonstrate the simplicity of how they can be interpreted. In my opinion, they increase and enhance the value and usefulness of the original Ocean Classic library well beyond its initial capabilities. I think that these tools should offer dramatic additions and improvements to your trading potential, such as, first, they provide you with new and highly accurate entry points that may often be different than zero hits, giving you many more trade setup locations. They also offer additional methods to better qualify NMC, NMC2, and NXC zero hits where counter-trend terminations are more likely to occur. Number 3, they supply you with new stop placement locations and flexible methods to scale out of those positions. Number 4, they give you new and enhanced methods to identify and quantify trend conditions in the market. They also provide better ways to classify and rank overbought and oversold conditions, and they offer you the ability to help hold on to trades for more open equity potential. They also supply you with new ways to identify the underlying volatility of the structure, especially new early warnings of low volatility climates where very rapid price moves are likely to develop. And lastly, they offer you much of the necessary information to be able to vary your initial bet size according to the required risk and probability of positive outcome, as well as to scale into positions as the tools adapt to changing market conditions. Of course, there are many other ways to benefit from the tools, and I expect that in addition to what you'll see in this video series, you will be able to identify new and creative ways to assimilate them into your own personal trading styles. Now, having seen the power and strength of the tools more or less in isolation here in this brief introduction, just imagine what the combination of all of them brought to bear on a single market using a side-by-side dual-screen page or workspace setup will be like by the time we get to the final comprehensive segment of our video series.